Thanks, Mr. Irwy. I know you've worked very closely with businesses to implement the mandate on companies and their reporting requirements. Treasury's received compliments from employers on the work on the mandate, not so much about the reporting requirements. And it's the employer groups you worked with most closely that are the most upset about these new reporting requirements. In other words, they aren't misinformed. They understand the rules. The Retail Industry Leaders Association has called these regulations mind-boggling for businesses of all sizes. National Restaurant Association described the regulations as overwhelming. It will create a morass of confusion for restaurant operators, typical small businesses in our communities. I assume you believe you did the very best you could. So is the problem the Affordable Care Act that needs to be changed to make this workable, or did Treasury get the regulations wrong?
Mr. Chairman, first of all, I would suggest that the employer reporting regulations are not excessively complex. The final regulations do provide simplified reporting methods that we expect many employers, especially when they have time to study and digest the rules, will be able to use. For example, an employer making a qualifying offer to full-time employees would be able to report in a very summary fashion. Employers that are self-insuring would be able to use a single consolidated form for the 6056 and 6055 reporting. And for employers that don't qualify for the simplified reporting methods, we don't think that, in fact, the reporting rules are asking for more than is reasonably necessary to administer the statute. At the employer level, name and address and employer ID number, contact person, basic information necessary to check compliance. At the employee level, generally, the individual's offer of coverage, whether they received an offer of affordable minimum value coverage from the employer, whether they took the offer, whether they enrolled in it, and if the individual is going to apply for a premium tax credit, we need to know whether the employer did make them an offer that would preclude them from eligibility for the premium tax credit. And Mr. Chairman, since these credits are available on a monthly basis, the information reporting is monthly. But we made the greatest effort we could to simplify and to try to streamline, talking to a lot of employers, employer organizations in the process. Where it's possible not to use month-by-month reporting, we provided an option to just have one code for the whole year. The information is sufficiently uniform across the year. If it's possible to avoid detailed information such as what was the dollar amount of the offer to the employee, which the statute asks for because the employee would not be entitled to a premium tax credit if they had an offer from the employer that was affordable, that was not more than 9.5% of their household income. We've looked for ways to help employers avoid having to do any work that could be avoidable, to incur any cost that might be avoidable or might be reduced. If an employer makes an offer that is sufficiently affordable to the individual, they wouldn't have to indicate what the dollar amount the individual would have had to pay is, as long as it's below an amount that would preclude the individual from being eligible for a tax credit in any event. We're just trying to look to the bottom line, Mr. Chairman, in order to streamline things as much as possible for the business, and that includes, of course, small as well as larger businesses.
Mr. Irwy, I don't question your intention or the hard work you did to put these together. That's not at issue here, but I've read the simplified approach. And coming at it from a Chamber of Commerce background, working with local businesses, having to file these myself, even the simplified form approach, extremely complex, I think burdensome, and so limiting. I predict very few businesses will be able to use that approach. I just tell you that from my viewpoint. So, couple quick points. You last testified before this committee on July 17th in the wake of the Treasury blog post delaying the mandate on businesses. You explained to the committee that the Treasury believed it had the authority under IRC 785A to delay the employer mandate. We asked several times in a straightforward question, if that gives you the authority to delay the employer mandate, does it also give you the authority to delay the individual mandate? If that was the policy the White House chose to pursue. At the time you said, we have not analyzed the question. I know we've had 9 months to look at this issue. So at this point, 9 months later, what was the result of your analysis? Do you have the authority to delay the mandate on individuals and families?
Mr. Chairman, thank you for that question. What we have done has been to take back the comments of the committee at that hearing, raising the question, should the individual responsibility provision be the subject of transition relief as well? We had thought about that carefully before the hearing, of course, but because the committee was interested in that and raised the question again, we considered it further and concluded that there is not good reason to delay individual shared responsibility. And if I could share our thinking with you, Mr. Chairman, first of all.
Can I ask this? Because, I think we recognize you've decided not to provide that same fairness for individuals, and I know you have a list of reasons why, but the question is, do you have the authority to delay that mandate for individuals?
Mr. Chairman, if we don't believe that it is appropriate to be delaying that provision, if we believe that it's actually fair to individuals to keep that provision in place because it helps protect them from pre-existing condition exclusions, from various aggressive practices that used to be possible in the insurance industry in the market, then we don't reach the question whether we have legal authority. There are a lot of things that we don't think we should do. We can't be and wouldn't be considering whether we have the same authority that we have with respect to the employer responsibility, where there's good reason to have given stakeholders the additional time that they very much asked for. There's good reason there to consider whether we had authority to do what was necessary. In the case of the individual responsibility provision, individuals who can't afford to pay that don't have to pay it. As you know, sir, there's a hardship exemption that HHS can provide for people who can't afford it. People who can't afford the coverage but want the coverage, they can get that through premium tax credits or Medicaid. So we did not see a reason to provide more phase-in.
Is you've chosen not to for the reasons you outlined, but the question still is, do you have the authority to? You didn't have the authority to extend tax credits to those outside the exchanges. You did that. So you didn't have the authority to extend the deadline for signing up, but you did that. So the basic question again is, do you have the authority, whether you choose to use it or not, to extend the individual mandate?
Congressman,
in your view, because I know 9 months ago you assured us you would analyze it and get us back that answer. So what is the answer? That's the question.
Congressman, we did analyze whether there was any reason to extend the time for the individual responsibility provision beyond the statutory phase-in or extension that's provided for 2014 and for 2015, such that the provision does not apply fully until 2016. So on top of that statutory phase-in, as you know, 1% of pay this year, 2% 2015, 2.5%, these are the maximums, by 2016. So the statute has phased that in. We don't see a reason to add administrative phase-ins on top of the statutory phase-in. And indeed, we do think, Mr. Chairman, sincerely, that this individual shared responsibility provision makes possible the key insurance reforms which have had even bipartisan support in Congress.
Sure. So do you have the authority, should you choose to extend the individual mandate, to delay it?
Mr. Chairman, that is a question that we don't reach because we do not believe that we have any cause to, or that we should delay it, and therefore we don't have the predicate for entering into the analysis of whether we would have legal authority. There's so many other things that we do not believe we should do. We certainly don't reach the question in those other areas whether we have legal authority to do something that we believe is unnecessary.
Have you done, since you chose not to, have you done the analysis? Maybe we'll go back to when you told us you would go back and do the analysis. Did you do that?
Mr. Chairman, again, what we did was to...
No, I recognize. The good news is you're talking to a committee that's been following your work very closely. But did you go back and do the analysis on the authority to extend it?
We don't think we have the authority to extend something that, a provision that where there's no need. There's no need in terms of administrability. Individuals can fill out their tax forms to indicate very readily whether they have paid whether they have coverage, and if they don't, whether they're exempt, and if they're not exempt, to make the payment. The tax forms are easy for individuals to complete in that regard. Lord knows I'm not suggesting our tax system as a whole is simple or easy to navigate, but this particular task for the individual is not a difficult task. Employers, by contrast, in complying with the employer responsibility rules, have more to deal with. They're providing the plans for all of their employees.
So I just want to give you plenty of time to answer so you could do it in a very clear way. So your answer is you do not have the authority to extend the individual mandate because you don't see the need to?
Well, Mr. Chairman, let me make clear. I'm not one of the practicing lawyers at the Treasury Department. My role is not to do the legal analysis. I'm a policy person, but
the analysis, you are, and I'm not. You did do the analysis as promised.
Mr. Chairman, I would like to go back, if I may, to the hearing record and to the transcript to make sure that I'm understanding what we undertook. Obviously, we're happy to help you and to be cooperative in your important oversight work. So if I'm misunderstanding what we agreed to do in July, then that's on me, Mr. Chairman.
But absent that, I mean, at the time you said we've not analyzed, we're going to do that. Simple question, did you do the analysis?
I did not do a legal analysis of the authority to extend a provision that we don't believe should be extended and that would not be good for the American people to extend. If
you've done the analysis, you would be glad to forward that to us? If it's been done as of this date, you'd be glad to share that with the committee?
Mr. Chairman, I'll be happy to go back to my legal counsel colleagues at Treasury. We have an excellent legal team, very experienced, very knowledgeable, and take this question back to them and see what they have to say and then get back to the committee.
Thanks, Mr. Irwy.